Alright guys, welcome to today's awesome meeting. Welcome to today's awesome class, right? Um, Today we're going to be talking about something very important in the forex market, right? But before we go ahead, normally the forex market, they hire the capital, they hire the assets you have to open different securities. What do I mean? They hire the capital in the market, like well, we open the market watch. This is the market watch. They hire the capital, they hire you have access to open different securities. Let's take for instance, you have $100 account. $100 account will not be able to open much securities, right? But do you know there is a way you can position yourself in the market? You will be able to use $100, you will be able to use $500, you will be able to use $1,000 to control something a bigger capital can do. Let me take for instance, you can be able to use $100 to control or to do the same thing an account of $1,000 can do. To use $100 to do the same thing an account of $2,000 can do, right? And what's that? That's what we are gonna be treating today, using that small account to control something bigger in the forex market. Right, so before we go ahead, do well to hit on the subscribe button, share to your friends. Those of them asking, oh, the daily analysis, the classes, and the this, that, we are looking for a way to make money in the forex market. Do that right now and see yourself making a whole lot of profit, right? So let's go ahead. And also, questions you've been thinking of asking, ask them below the videos, and I will take all your questions. All the questions, ask them. So what are we going to be talking about today? The one and only leverage in the forex market. Leverage. Now, remember, before now, you and I, we are not allowed to trade the forex market. You need a minimum of $50 million to trade the forex market, right? You need a minimum of $50 million to trade the forex market. That's if you don't have $50 million. In fact, if that same rule is still there till today, I don't think some persons will be able to be trading the forex market today. So that rule was there. You need to have $50 million for you to trade the forex market. How come you and I are not able to trade the forex market? Yes, the brokerage firms helped. Yes, not only that they helped, they also provided what is called leverage in the forex market. So what is this leverage? Leverage is the ability to use something small to control something big in the forex market. Leverage is the ability to use something small to control something big in the forex market. Right. So if you do create account, or if you have created account before now, like a live trading account before now, you will see things like when it comes to the leverage, you will see things like 1:100, 1:100, 1:200, 1:300, 1:800. Some persons go choosing whatever they want, not knowing that it's going to affect either positively or negatively in the forex market. Yes, it can affect your account either positively or negatively in the forex market. So what do I mean? In this market, if you have a little account or a smaller account, to control something bigger in the forex market, all you need to do is to go for a higher leverage. Let's say for instance you have a $200 account size. A $200 account size is limited by few positions and also by the lot size. But there's a certain leverage you can choose among the 1:100, 1:200, 1:300, 1:800. You can still do something that someone who has a larger account can also do, right? Let's take for instance, I'm creating a live account and I have a $200 account size, and I create the account with 1:800 leverage. 1:800 leverage. What does it mean? If I create an account with 1:800, it simply means to every $1 I have is equal to $800. To every $1 I have is equal to $800. So if I have $200 account, it's gonna be 200 times 800. Whatever it gives us will be what you have. It's gonna be $200 times 800. Remember, to every dollar I have is equal to 200, 800. So it's gonna be 200 times 800 that will be giving you about $160,000. So you'll be trading with about $160,000. You'll be seen as a big boy in the market, a big guy in the market, right? So you'll be, if you are restricted to only three securities or two securities with your $200 account, or four securities with your $200 account, you can be able to trade more than that, because you are not looking like someone who is very rich and someone who has more money in the forex market. So leverage, if you use a leverage of 1:100, it simply means to every $1 you have equals $100. So if I create an account with $100 and I fund my account with $100, so, and I'm using a leverage of 1:100, it simply means to every $1 in my account is equal $100. So it's going to be 100 times 100, whatever it gives you, that's the amount the forex market is going to see you. And that will help you and enable you to control larger capitals in the market. All right, take it. If you are using a leverage of 1:100 for your life account, and you also have a $500 funded account, that is a $500 worth of account, how much will you be seeing as in the forex market? This money is not, it's not yours, but it's like using something small to control something big. They are leveraging you, right? So you have 1:300, 1:300 as your leverage while you are creating your life account, and you have a $500 funded account. What do you do, or how are you seen in the forex market? It's gonna be 500 times 300. That is how you'll be seen in the forex market. You'll be seen as a big guy in the forex market. So you'll be able to control something big, something bigger in the forex market, something bigger with your small account, right? Yes, but this also has a disadvantage. This leverage, using a high leverage, as a result of this leverage, some persons even ask for a leverage of 1:900, 1:1000, one is to that, one is to this, right? Some persons ask for higher leverages in the market, higher leverages in the market, in order for them to meet up and make much more money in the market, right? This is very, very good. But the disadvantage is that if you are not profitable, it's going to really be against you, right? If you are not profitable, it's going to really be against you. Imagine a situation where you use a high leverage and you're able to open different securities, a lot of securities in the market, a lot of a lot of pairs and the rest in the forex market, and market isn't going in your favor. If you're a loseraholic, it's gonna really affect you. If you're a loseraholic, it's gonna really affect you. But if you are profitable, 1:1000 leverage is good for you, 1:900 leverage is good for you. But if you are losing, or if you are in the losing end, it's going to really affect you. What the brokers does is that they put their money and leave you in the dark, and the account is being affected. That is when you are not profitable. If you are profitable, leverage is just there for your benefit. But if you are not profitable, it's going to really affect you. So number one, think of being profitable before going for a higher leverage. There is still another way of using it. Instead of you thinking of using a leverage of 1:1000, 1:2, 1:1000, 1:900, you can stay in the middle. You can stay in the gap. You can use a leverage of 1:400, 1:500, right? So if you come to your account, I think I created an account for this same meeting. Let's say I place a trade with a standard lot, a buy here. Now, if I check my cap terminal, checking my terminal, you can see this running trade here, right? You can see this running trade, right? You can see my balance. This is my balance here. This is my equity. Now, what is equity? Balance and equity. What is equity? Equity is the running trade, whether you're in profit or loss, whatever is taken from you or giving you, merging it with your balance, that's what gives you your equity in the market. So leverage is very good. Leverage is very good, very good, only if you are profitable. Only if you are profitable. Remember, equity is different from the balance, in the sense that the balance does not change even when you are in profit or loss. The balance does not change even when you're in profit or loss, but you can see the equity is going up and down. So if you're in loss here, let's say you're buying and you're in loss here, or you are selling, you are in loss, they will subtract it from your balance. Whatever it gives you, it will just continuously be changing in your equity. And if you're also in profit, it will continuously be changing in your what? In your equity, right? So that's it. Leverage is very, very good in the forex market only if you are profitable. Only if you are profitable. But if you are starting and you're a new biz in the market, just be in the middle. You can use a leverage of 1:100, 1:400, 1:300, and also 1:500. It's more sustainable that way than using a much higher, right? So we go to the next thing we have today, and what is that? That is the spread. That is spread. Let me quickly take off this trade we just took in this practice, in this account here, because I just created it for this particular video, right? So we get to the next thing we have here, which is the spread. Now, what is spread? Some persons have been asking, why is it that when you place a trade and it takes you out in it starts in loss, right? It starts in loss and doesn't just go into profit, or doesn't just hit your profit level, right? Now, whatever trade you place, whether you're a professional trader, novice trader, intermediate trader, whatever type of trader you are, when you place a trade, it's going to start with a small minus, a little loss in the market. What do I mean? If by the time we get to our account or our live trading account, now whatever trade you place, just like this, right? So let's start. Okay, let me buy here. Then go to control. But you can see I just bought, and you can see the spread with a standard loss size. You can just see the spread here. You can see I'm starting with a minus, a small loss in the market, a small loss in the market. Now this spread is also dependent on your loss size. So what is this spread? Remember, initially we were not allowed to trade the forex market, right? We were not allowed to trade the forex market. What do I mean? Forex market was only restricted to the big boys, was only for the big boys in the forex market. It was only for the big boys. So how come we are now able to trade the forex market through the help of the brokerage firm? Not only do they provide us with leverage, they also provide us with what? Spread. And what is this spread? Spread is the charge your broker charge you for rendering this service to you, for giving you access to the to your liquidity providers, for connecting you to your liquidity providers, for helping you to stay in your house to trade, for helping you anywhere you are, you will be able to trade the forex market. So that's what spread is. They help you. It's just like they charge you for rendering this service for you. I'm doing a business, and for me to render a service to you, I got to make money. So that's the little money they make. Now some persons will be like, how do they make money through all this little, or how will they make money from your 30 cents that they charge you, for your 50 cents that they charge you, for your $1 they will charge you? How will it give them a reasonable amount of money? Remember, if I have 1 million persons as per capacity trading in a particular platform, by the time I take $1, some persons $10, some persons $5, some persons $2, bringing all together, I should be able to make something reasonable from the market. So spread is there for the brokers, but don't be afraid. It's usually a little spread in the market, especially that's why when creating an account, you have to ask yourself, what is which of the brokers will be better for me, which of them do I need, and which of them wouldn't be good for me. Yes, you check their spread level and the rest. So in case you've not created any live account, you can look at the description level. There is for you to hit and create your live accounts with a little spread. So you look out for brokers with minimal spread, little or no spread, or minimal spread in the market, for you to be able to make money. Not only making money reasonably from the market. So that is it for spread. They charge you, the little charge they charge you for rendering this service to you, right? So that is it for spread. Not only that, we also have what is called swap. Swap. What is this swap? Now, if your swap is the charge you pay your broker for leaving trade overnight, right? For leaving trade overnight, if you, especially those of them that are not day traders, those swing traders and the position traders, by the time you place a trade, leave it till the next day, they are going to charge you, and that charge is known as swap, and it happens overnight, right? They are going to charge you for swap. And this swap, they are of two types. We have the positive swap and the negative swap. If you are buying a currency of positive interest rate, they will charge you positively. That is, they're going to add to you. But if you are buying a currency of negative interest rate, it will be taken from you. But don't get angry, right? Don't feel bad. It's just a little token, especially for swing and position traders. But for day traders and the scalpers, swap is usually minimal. And why you, as a day trader, why are you leaving trade overnight? So it's not applicable for day traders and scalpers, only for swing and position traders. Even though you're a swing and position trader, the charges is so usually little, and it's of two types. There are some, if you are buying the currency of interest rate, a positive interest rate, they are going to add to you instead of taking from you. You will just wake up and you see that they're adding $10 to your trade, whether in profit or in loss. That's just your benefit. And if you are buying a currency of negative interest rate, they are going to take from you. So that is it for swap. That is it for swap. So we also have the one they call the bid price and the ask price. Right? So the maximum price a buyer is willing to buy, that is known as a bid price. So what is this? I walk up to your shop. I walk up to your shop. Not only get into your shop, I ask you, madam, please, how much is this stuff you sell? You tell me it's $200, or you tell me it's $1,000. I'll tell you, no, 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 I don't have $1,000. Only what I have, the maximum thing I have here is one, or let's say $950, and you insist, no, I can only give you for $960. Meanwhile, I have $950 and you're only willing to sell at the rate of $960. $950, which is the maximum price a buyer, I'm telling you, madam, I can't exceed $950. That $950, which is the maximum price the buyer, which is me, is willing to buy, is known as the bid price. The maximum price a buyer is willing to buy is known as the bid price. So if you come to this place, you will see bid here, you also see ask. So what does the ask mean? What does the ask mean? Ask is the minimum price a seller is willing to sell. The seller is telling me, no, no, I can only sell for $960. Remember, what I have is $950. $960, $960 becomes the ask price, the minimum price a seller is willing to sell. That is known as the ask price in the market. The minimum price a seller is willing to sell. That is the ask price. It tell you I can't exceed $960. So at the end of the day, both of you can cut the business from there or go your different directions in the market. So you can see how important all these are. If you get to this particular place, when you get to this particular place, you will see bid here, you will see ask here, bid, ask, bid, ask. So you always see the bid price, you always see the ask price, the bid price, the ask price, the bid price, the ask price, the bid price, the ask price. So all these things are very, very important in the market for you to be profitable in the market. So as of today, I know would like to see some analysis and the rest. So I will just go for one. What is the one I'll be going for the Euro USD? Euro USD today is a buying market. For today, Euro USD is a buying market for today and is in a strong buy. Euro USD is in a strong buy. All you have to do is to wait for confirmation, a good candlestick confirmation, you buy. If it doesn't make a deep retracement, because we are not seeing that right now, if it doesn't make a retracement, a good retracement to the downside, all you got to do is to do what? To wait for a break of this resistance. If this resistance is broken, a good candlestick to break above. If it breaks above, if there is a break above, closing above, not only breaking above, closing above, you can go in for a buy. Euro USD today is for a buy. If it doesn't make a deep retracement, wait for a confirmation, allow the candlestick to break above, close above, then you can go for a buy. Else you allow the market to do whatever it is doing. But if you still make a deep retracement, allow it to finish or the retracement to get exhausted before you go in for a buy. Else allow it to break above for you to buy, but it's a buying market for Euro USD. Then the GU2, the GU2, the GBP USD is still a buying market, so allow it to finish its retracement. But if it doesn't finish the retracement, or if you just want to consolidate and break out, allow the market to do what? To break above the resistance here. When it breaks above here, to the upside, giving you a bullish candlestick confirmation, then you can go in for a buy. Don't think of selling Euro USD and GBP USD. Even though they are selling, it's just a retracement. Even though they are selling, it's just a retracement. But if it doesn't retrace, allow the market to break above for you to continue the buy. Are you enjoying this video? Remember to let your friends and families to know so that they will be joining us for our daily analysis and daily talks on trade, right? So before we go ahead, as a way of recap, remember we started with leverage. Today we started with leverage, and we said leverage is the ability to use something small to control something big in the market, right? So you can have $100 account and be managing and be trading like someone who has like $20,000, who has like $10,000, who has like $30,000. That is for leverage. But it also has a disadvantage. If you're a loseraholic, it's going to be a disadvantage for you. But if you are profitable, it will help you to easily hit the market and make money on time. So spread is a charge you pay to your broker for rendering a trade service to you. Like when you buy or sell, that little minus you see, when you place a buy before entering to profit, that is known as spread. Then the swap, a charge you pay to your broker for leaving a trade overnight till the next day, that is known as a swap. Then we also have the bid price, the maximum price a buyer is willing to buy. The maximum price a buyer is willing to buy, that is known as bid price. Then we also have what is called the ask price, the minimum price a seller is willing to sell. Wow, thank you so much for joining us for today's class. Remember, all the questions you have, no matter how big they are, no matter how small they are, bring them to the just text it below any video, provide they are on forex, send it below any video, and I will be able to take your questions from there. No matter how the question is, send it below the videos and I will take your questions. So you enjoyed this video. Thank you for joining this meeting today. Right, all right, bye now.